Hi students, today we are going to discuss the topic which is very important, which few students consider as a difficult chapter, and the chapter which has been recently added into your CA foundation syllabus, that is accounts from incomplete records. And this is a very good chapter. It tests your efficiency in many aspects, right? So before we start, first let us understand how this topic came into existence. Okay, so for that, my first question to you is, you need to tell me what is the significance of this number for an accounting student. Any remembrance? Now let me tell you, this is a year. 1494 is a year. Okay. 1494 is the year when our father of accounting, that is Luca Pacioli, wrote the first book on accounting. That we need to remember. Right? And why we also remember the name, that the name of the book was Summa. Okay, Summa the Arithmetica, Geometrica, a very big name was there. So what this book was, this was a mathematics book, and in that mathematics book there was a chapter which discussed about double entry system of accounting. Okay, and this became the first point when somebody started discussing about accounting with principles. He laid down the principles of accounting. Okay, so that's why he was regarded as the father of accounting. Now the question comes. So I don't want to go into the depth who was Luca, but there are many things associated with him, right? So first, 1494. Now question arises. 1494, we started with a double entry system of accounting, which is the most scientific way of accounting. Now question arises, whether before this there was no accounting? Whether before this there were no business? Because if there were business, then there would have been existence of accounting. Then question comes, what type of accounting it was? And that type of accounting which was existing before double entry system, which was not governed by any set of principles, was referred as a single entry system. The question arises, sir, are we the students of the history? We should go back to the accounting system which was there before 1494 and study? No. Even though it was existed before 1494. Okay, even though we started with the double entry system, remember, till today we are practicing this system, that is single entry system. See, there is no entry system called as single entry system which is not a double entry system, is called as single entry system. Okay, so it was existing before and it was existing now only. Now the question arises, sir, even though there is a double entry system, why single entry system is existing? Now, let me tell you why it is. Now, just assume a small pawn shop, and even the pawn shop comes under the definition of the entity as per the basics of accounting. Any business organization, right? So pawn shop is a business organization. So pawn shop also has purchase, also has sales, it has opening stock, it has closing stock, it does all routine business transactions which any other entity does. Right? So now, you just assume, do you expect the owner to be a qualified accountant? Okay, no, not possible. Or rarely it is possible. What he needs to do, he needs to maintain journal, he needs to maintain ledger, he has to prepare tv, he has to prepare final accounts, everything he has to do. For that he is not the right person. He has to hire an accountant. Nowadays computerized accounting is accepted. He has to purchase a computer, install the tally software. Tell me whether his business revenue and profit allow him to do this? No. He is forced to go for this single entry system, which is much simpler than double entry system. See, what is this? This is doing as per your convenience. That is single entry system. Okay, so today also there are many sole traders who have very small business are still following single entry system. Okay, and now today what we are learning is, see, assume that there is a person who is following single entry system. He has, his scale has went from small to large, medium large ban gaya uska business. Now what he likes to do is he wants to move to double entry system. See, everyone wishes to do it legally, but the money factor did not permit him to go for double entry system. That's why he was in single entry system. And now he likes to go forward and want to convert his accounting into double entry system. At this point, the significance of this chapter arises, that is accounting from incomplete records. Right? So whatever incomplete records are given to us, because when somebody does under single entry system, you will learn it clearly when you come to definition, why we call it as incomplete record or single entry system we call, right? It is, you will come to know the reason. So now he wants to come to double entry system. So how this single entry can be converted into double entry, that we will be learning under this chapter, that is accounts from incomplete records. Because that a CA has to guide him, right? And accountant has to perform it. CA guide karta hai कि how single entry can be converted into double entry, and accountant do as per that. Okay, so today's our topic is completely based on conversion of single entry into double entry. So now let's come to the module where we can see, we can discuss this chapter in depth, right? So we have covered this already. Okay, now this paragraph is little important. That is, the way single entry system operates is that for some transaction, that's what I was saying you, why we call it as incomplete records. We need to understand that, okay? So the way single entry system operates is that for some transactions, the bookkeepers complete the entries, and for some others, they complete just one aspect for the transaction. In fact, for some other transaction, they even do not pass any entry. Try to understand what they are saying. They are dividing transactions into three categories. For few I am saying they are doing double entry. For few, they are not passing at all any entry. And for most of the transactions, what they do, they pass one, they make entry, entry for one aspect, and they don't do any entry for the other aspect. That's why it was popularly known as single entry system, because for most of the transaction only one aspect was recorded and not the other one. Okay, then the task of the accountant is to establish a link among the available information and finalize this accounts. This is what we need to do. Okay. Then next is, any other thing is left, just check. Okay. Now next, features of single entry system. See, I already said, see, as for most of the transaction only one aspect is recorded and not the other, it is inaccurate, it is unscientific, and it is unsystematic, because for few we do not make any entry also. Then method of recording business transaction, and there is generally no record for real and nominal accounts, and most of the cases a record is kept for cash and personal account. Matlab, most of the time only these accounts are maintained, and real and nominal. What is mean by real? Nominal means expenses and incomes, losses and gains. These are not considered. Okay. And what is mean by real? Real belongs to assets. That is cash, bank, machine. These all comes under real. But cash transaction records are maintained, and even personal accounts are maintained. Personal accounts may involve liabilities and assets. Okay. Then cash book mixes up business and personal transaction. Oh, there is not a line of difference between personal and what? Business transactions. Both are combined, and you know that it is against business entity concept. Then there is no uniformity in maintaining the records, and the system may differ from firm to firm. That's what I said. Unless in the 1494 our father Luca Pacioli came with some set of principles, before that everyone maintained in their own style with their own principles. That's why it is said that there is no uniformity in maintaining the records, and the system may differ from firm to firm depending on the requirements and convenience of the each firm. Right? As they felt convenient, they maintained, not as per the principle. Okay. Then profit under this system is only an estimate based on the available information, and therefore true and correct profits cannot be determined. Yes, because when you don't have all the journal and all the ledger accounts, you cannot ascertain profit and loss, because it's very difficult for you to prepare trial balance, or it's impossible for you to prepare trial balance. Then types of single entry system. There are totally 3 types of single entry system. First one is pure single entry system. Here only personal accounts are maintained, no other accounts are maintained. That is called as pure single entry system. So what we maintain? Only personal accounts. Okay. Then in the simple single entry system, we maintained personal as well as cash book. Okay. So then next comes quasi single entry. Here personal account plus cash book plus few subsidiary books were also maintained, right? Like purchase book, sales book, bills payable book, they maintained it. Okay, so that was referred as quasi single entry system. Then next is, so this is what they said. See, only personal accounts are maintained here. Here personal account and cash book, and here personal accounts, cash book and subsidiary books are maintained. Okay. Then next, how the ascertainment of profit by capital comparison. See, if you remember, I used to tell you an example in the class, that is, the capital increases or decreases, the capital changes with the increase or decrease in the profit. If the profit increases, the capital also increases. If the profit decreases, or if there is a loss, then the capital decreases. Okay. Then the method is known as net worth method or statement of affairs method. So profit is equal to closing capital minus opening capital. So what is the formula for profit? Profit is equal to closing capital minus opening capital. Okay. Then next is, देखिए, like there is a paragraph which you may read later on. So the difference between closing and opening is considered as profit. That you need to understand. Next is methods of capital comparison. So there are two ways in which you can do it. Number one, you can do by a working note, or you can prepare even capital account, that we will see later. See, now closing capital increases if there is a profit, that's what I said, and while it reduces if there is a loss. Okay, then however, if the proprietor or the partners make fresh investments in the business, capital increases, and withdrawal made, then that capital is decreased. Very true it is. We have, if you remember, during your first year in the final accounts, we used to do the same thing. In the capital which is given there, we used to add additional capital, profit, interest on capital, and we used to deduct drawings, interest on drawings, and a net loss. Okay, so now, next is, the following table shall be considered while computing the profit or loss. See here, the capital at the beginning, if it was there, then additional capital add hota tha, net profit add hota tha, but what we have taken first, capital at the end we have taken. Okay, then what we did add drawings, because when we start with the closing, we need to reverse it. Okay, then less fresh capital. If it was opening capital, what we would have done? We would have added additional capital and deducted drawings. But we are starting with the point closing capital, then drawings will be added and fresh capital will be deducted. In the same way, interest on drawings will be added and interest on capital will be deducted. Okay, so if you do that, then what you will get? You will get the capital at the beginning. Okay, so this illustration is there. You can refer this at your home. Okay. Now, how the statement of, see, we need to have the capitals for doing that opening capital and closing capital, and the closing capital and opening capital can be ascertained by preparation of statement of affairs, which looks exactly like balance sheet. Okay, so in the balance sheet, what we consider, on the right side we consider assets, and on the left side we consider liability. Here also we have done the same thing, and then the total of asset will be taken and the total of liability will be deducted, and whatever amount is left, that will be considered as capital, and that will be noted as balancing figure. Because when we write balancing figure, what does this mean? This is not provided in the question, we have ascertained it. Okay, so next. There is illustration too, even you can go through that. Next. Difference between, now I said, like, statement of affairs is like a balance sheet, but it is not a balance sheet, that we need to understand. Okay, so that's why let's see what are the differences between a statement of affairs and a balance sheet. See, the statement of affairs is based on estimated value of liabilities. We don't know what is the actual value of liabilities. We just estimate them. But whereas the balance sheet is based on the actual records. See, it is based on the transactions recorded strictly on the basis of double entry. Okay, that's why these records are based on estimates and this is based on records. Okay, then next is, here the capital, you see, why in the statement of affairs, whatever capital we get, it is not the actual investment of the proprietor, it is the balancing figure. So if you have taken assets wrongly, then certainly your capital will also be wrong. That you need to remember. Okay, see, then next is, here the capital is derived from the ledger. We prepare in ledger account. If you remember in your first year, while drawing the ledger account, first account would have been cash and next account would have been capital. Okay, the next. Now, as it is incomplete record, right? See, it's very difficult to understand what are the omissions. Okay, so you'll never come to know what is omitted and what is considered. Okay, so that's why, so whatever is considered, we can't be assured that everything has been considered because we don't have any records. We are just estimating. Okay, done. Here it is all done in a scientific way because each asset has a ledger. Okay, done. The objective of preparing statement of affairs is to ascertain the opening and closing capital, but whereas the objective of the balance sheet is to ascertain the financial position. Okay, so the object of preparing balance sheet, you have written this answer many a times in first year, second year, whenever it is asked why the balance sheet is prepared to ascertain the financial position. We have answered this many times. But it's not the case in statement of affairs. It is prepared to ascertain the opening or closing capital. Next. Preparation of statement of affairs and a determination of profit. So there may be few problems which are based on this. You can see the statement of affairs is prepared. 21 means opening and 22 means closing. So whatever capital it is ascertained here, it is considered as opening capital and this is considered as closing. So now what they have done, first capital less, I said when we are considering closing first, the additional capital will be deducted. Add drawings, then whatever comes in that we are going to deduct opening capital. So whatever is the difference, if it is positive, it is profit, and if it is negative, then it is loss. Next, alternatively, this can also be done by preparation of an account. I said about this earlier also. Then, like this, there are many other problems. Now, next is techniques of obtaining complete information. Okay, the question arises, sir, what is this techniques of obtaining? Okay, so you need to understand this paragraph to understand. When books of accounts are incomplete, it is essential to complete a double entry in respect of all transactions. The whole accounting process should be carefully followed and the trial balance should be drawn up. Okay, and for doing this, what you need? You need information, because here the information is incomplete. To have that complete information, what all techniques are available? See, first one is general technique. What is this? This is general technique. Okay, so what we need to with the cash book, then amount. See, there are various things which we need to. Then next is derivation of information from the cash book. These all things we will learn in our next class. Okay, thank you very much. Madam, stop ಮಾಡ್ಬೋದು.